Hello there and welcome to the Bitcoin Takeover podcast. This is season 16, episode 36. We are live with Cheng Wang and Mod Bannwart, if I pronounce that correctly. And this episode is sponsored by Citrea, Layer 2 Labs, SiteShift, Edge Wallet, Bitcoin.com News, NoOnes.com, and I think that's it. It's really good to have you guys because I met you last year in Frankfurt, if I'm not mistaken, and I was intrigued by this concept of proof of less work and the way in which this basically consumes less energy while still remaining proof of work. And as far as I know, Alephium, which is your project, is like a mix between proof of work and proof of stake. No, sorry. I misworded that. It's like a combination of Bitcoin and Ethereum. It takes Taproot, and you also have UTXOs, which Ethereum doesn't, but tries to fulfill the functions of Ethereum with Bitcoin technology. And I think it's very interesting and it's proof of work, and that's why I decided to get you on to learn more.
Awesome. Thank you. Thank you for having us.
Okay, so where do we start? Like, how did you come up with the idea for this project? Also, for everyone out there, none of this is financial advice. We're not telling you to buy anything unless you really want to buy it and you are sold on the concept. So why would you build this as opposed to working with, let's say, Ethereum Classic, which is also proof of work?
Maybe I get started. Yeah, so it all started with a very technical problem. It's called the scalability of blockchain. I think back in 2016, the Ethereum Foundation, they started to invest heavily into this scaling solution for Ethereum. They wanted to go sharding, which was considered to be the most promising way to scale a blockchain. Basically, you can have multiple blockchains running in parallel instead of just have one blockchain. They invested a lot of resources and like researchers into the problem. Did not find a good solution, and I was quite triggered by the problem as well. My background was computer science and consensus research, and I'm very obsessed with challenges. So I started to look into this problem, and then I managed to find a very good design to tackle this problem. It's way simpler and much kind of easier to put this into implementation. Then I started to work on this with a team of engineers, and then we got the prototype, and then we start to get more people to work on the projects. So that was the beginning. And then we have a very long evolution of the project. We started with just doing scaling, and then we get DeFi, basically like bring DeFi to the UTXO of Bitcoin, and we have proof of less work to mitigate the energy consumption issue. Yeah, we have like new virtual machine, new programming languages, just so all in all, like is full of new innovations. So that was the key of the project.
Right, so you're saying that this started from the Ethereum initiative to find better scaling solutions, which means you probably started from the technology of Ethereum, which is EVM. No, you didn't?
Alephium was always, I mean, maybe here I'm wrong, but meaning I think it was always Cheng's approach to scale proof of work in UTXO, because sharding is it's much nicer to do sharding actually on proof of work in UTXO. But maybe that part of the history, I don't know, maybe you did start looking first at the account model, Cheng.
Yes, so actually I first heard about Bitcoin, and then in 2015 I got an email from Ethereum Foundation. They read my research paper. They invited me to talk about my research. So I kind of dive into Ethereum a bit earlier than Bitcoin, even though I know Bitcoin a bit earlier. So I understand the account model and the EVM a bit back then. So I know kind of the the weakness or the drawback of these models pretty well. And then when I was researching the scalability issue, I kind of started to look more into the Bitcoin approach, and then I somehow, like someday, I got the idea that maybe the UTXO model could be a great way to solve the scalability issue, and then I started to look in that direction, and then I managed to find a way to leverage that. So that was the kind of the full story. So somehow I know Bitcoin first, but I dive into Ether like earlier than Bitcoin, and then I managed to leverage Bitcoin a bit more. So it's yeah, kind of both are quite important.
Yeah, but you're gonna find Ethereum people defending the account model, saying that it's so much better. You don't have to spend any transaction fees managing your UTXOs. It's just there. You receive it to your address, and it's much like a bank account, maybe. And still, when you built this Alephium, you decided to go for UTXOs. And what is the advantage, or how would you describe the reason why you decided to go for UTXOs as opposed to accounts?
Yes, so account model is definitely much more flexible, and also has some other advantages like in some cases the fee is a bit cheaper because you don't need to manage the UTXOs manually, right? But UTXO has its own advantage as well. Like the biggest one is the immutability. So you have the UTXO, you cannot really change it, right? So it's very secure. And also in computer science, immutability is a very important property for scaling. You won't have race conditions if you have multiple like processors to try to use the same UTXO, because it's immutable. You can use it. You know that it's going to be stay the same. So that was the key for scaling. So you see that both have kind of have pros and cons, right? So the tricky part is how to leverage both to solve the scalability issue, and at the same time try to retain all of the flexibility of the account model. So we manage find a way to do that. So the idea is actually quite simple. So like basically for applications, you have two states. One state is the ASICs. It's basically the state for the cryptocurrency, like the balance of users, right? And the second type of state is the application state. For example, is the price of the trading pair. So both are actually quite different. So the approach we found is that we use the UTXO model for the assets. So it's like Bitcoin. We use Bitcoin for all of the coins, all of the tokens, and then we have states for the applications. For that, we use the account model. So it's kind of we kind of combine the kind of the both approaches, and in the end we get the advantage of both. For the assets, we get the security of UTXO, get the scalability of UTXO model, and for the smart contract stuff, we still have mutable states, so we can build all kinds of applications on top of it. So yeah, that's it.
Would you say that having multiple UTXOs per wallet is also good for privacy?
Yeah, privacy. So there are a lot of like big advantages of UTXO model. I was mainly talking about scalability, so definitely there are some good things about privacy as well. Especially you can use UTXO to build a mixed network. And with account model, you can also build different type of privacy stuff. They come with different trade-offs. But in general, I feel like UTXO model is much more simpler to for security sides. For privacy, definitely you can do a lot of things. However, if you want to do like more advanced stuff, sometimes you probably need to also need a little bit more mutable states, like the account model. For example, if you go for DK stuff. But for UTXO, you can still do very unique and very quite advanced privacy stuff.
Yeah, so you mentioned scalability a few times. And what I learned from the Blockstream side of the story is that blockchains don't scale. So what are you guys doing, or how do you make it scale?
Yeah, so of course, if you compare to the Web2, the traditional distributed system, of course there is a overhead that if you try to scale the blockchain, because anyway you're going to run like many full nodes in the network, and the full node they have to communicate with each other. So definitely this is much more expensive than if you run run the service on one or two servers, right? But still, even if you assume that you run on a very large scale network, you can still do a lot of optimizations, right? Like for example, if you reduce the block time of Bitcoin to 5 minutes per second, 5 minutes per block, then you basically scale the throughput by 2 times, right? And the security won't be impacted. It's just the overhead is that all of the funnel on the network, they are going to basically handle twice the amount of the transactions if all of the blocks are full. So it's like a flow of trade-offs. You basically trade off a little bit of the computation or networking for a bit more transactions. Of course, for Bitcoin, you can reduce the block time a lot. You can increase the block size a little bit, but there's a limit, right? And then when you cross a certain of the limits, you have to leverage some of the more advanced stuff like sharding. Then you have multiple blockchains. You can also try to optimize the network layer, optimize the execution stuff, etc. There could be a lot of things could be done. Yeah. So basically, what we do is we propose a new algorithm so that we can run the blockchain, like the execution in parallel. So if your front node have multiple processes, you can do a lot of the executions in parallel. And for Bitcoin, for example, or for Ethereum right now, you cannot do this. So that was kind of why you can still scale it, even though we know that the blockchain cannot really scale that much. And also it depends on the assumption. Like, so like for Bitcoin, it's like try to be very lightweight, very efficient, right? So it assumes that the full node can run on very cheap computers, right? But for Ethereum, for Solana, for example, they are very different. Actually, full nodes have to run on the much more powerful servers, right? So it's really about like what type of machines you want to target, right? And so if you target like very powerful servers, you can you can go much higher throughput, much higher performance. So it's really about like what the network is gonna target, and then you can do a lot of optimizations based on this kind of performance target.
Right, but running multiple blockchain shards in parallel requires some sort of coordination between them. And my question is, at surface, you can argue that having multiple shards is decentralizing, but having to coordinate them is also centralizing. So how do you keep this decentralized? Because it's a very delicate balancing problem, I think.
Yeah, you are. I think you're quite correct, quite to the point. So definitely has trade-offs. Pretty much like in Web2. Web2 you have a lot of sharding stuff, right? For example, you have web service that's, for example, for the Google Meet or for Twitter services. When you have like too many users, you have to scale it, and then you have to kind of divide the users into different groups, and then for each groups you host them in a dedicated server, right? So this is sharding, and this has a cost. The cost is that you cannot really it's not as efficient as you have a single server where you can just do all the queries in the single server, and with multiple servers, you have to do the dispatching stuff for the users for the service. So it's pretty much like this in blockchain. If you have a multiple shards, then you're going to have some service to do the coordination, to dispatch the transactions, to synchronize all of the states of the different shards, and make sure that there's no double spending. Yeah. So this was actually one of the core parts of our block flow algorithm. So we found a way to kind of resolve the conflicts in the blockchain, and find a way to select the right forks for different blockchains. And then we leverage proof of work to ensure that the whole network keep advancing, keep producing blocks without breaking the consensus. And the kind of the guarantee of safety is pretty much like Bitcoin. You basically calculate the kind of the accumulated work from different blockchains, and you aggregate them, and then you compare which DAG has the most amount of work. So it's the only difference with from Bitcoin is in Bitcoin you only compare the accumulate work of the chain, but in our case we have like a DAG chain. So you have to compare the kind of the sum of the work from the DAG. So that was it.
Just for those who might not know, what's a DAG? DAG, right?
Yeah, so it's DAG is directly acyclic graph. So blockchain is a chain of blocks, right? You have blocks that follows one, follows another. And in DAG is a graph. You have multiple chains, and then all of the blocks they have dependencies. So it's like a network, more like a network instead of just a chain. So that's why we call it block flow. It's a flow. It's not a blockchain. Yeah, the DAG this is a very common mathematical structure, and it has a very good properties. You don't have loops in the structure, which can prevent you have some weird transaction relationship. It's quite common. Actually, in Bitcoin, you have this as well. In Bitcoin mempool, you have data structure, a DAG data structure to maintain the relationship of all of the transactions based on the input and output. So like one transaction could use the input from multiple different transactions, right? And then you have from this you get the dependencies between transactions, and then you can build a graph based on that. And this graph has the great property like a DAG. You don't have loops in it, and with that you can apply very efficient graph optimizations. So you can have a very efficient mempool. As we all know that in like when the network is very congested, mempool has to be very efficient. Otherwise, the network can be the transactions is very hard to be managed. So that overhead has to be managed well, and the DAG was really a great data structure for that. So it's the same for blockchain. We have that as well. If you have to improve the throughput of the blockchain a lot, you have multiple blockchains have many like very fast blocks, then you have to use this efficient data structure to handle that.
Right, so the way in which Alephium scales is with parallel blockchains, which are basically sharded. But my follow-up question is, what happens if one of these shards falls behind in terms of synchronization? Or maybe that they get shut down or they get attacked or something like this. Does the chain still function? Or what is the number of shards that need to get down for the chain to basically shut down?
So if you're under the, for all of the blockchains, you have the assumption that 51% of the nodes are honest, right? So if you have this assumption, there will always be hash rate that is mining on all of the blockchains. Then you are guaranteed that you have enough hash rates to make progress. And for proof of work, actually, it favors liveness over safety. So it means that block production is usually guaranteed. You always have the hash rate to find the new blocks. The more tricky part is the safety. So it's no double spending is more tricky question for proof of work. So like that was another issue if you have honest hash rate mining on the blockchain. Yeah, the tricky part is the double spending part, and that was guaranteed by the algorithm.
Yeah. It's also, so you made a very interesting statement there about basically reducing the block time of Bitcoin. And to a lot of Bitcoiners, this is so blasphemous. They're so, how should I put it, religious about the 10-minute block time that they think that anything less than this is centralizing, even though I think Litecoin proves that even with 20% of that, which means 2.5-minute blocks, you still have pretty good decentralization. But my follow-up question is, because I know that Alephium generates new blocks very fast, isn't this centralizing in the sense that there are parts of the world where people cannot validate because they don't have fast enough internet to participate the consensus?
So yeah, this is definitely has a lot of trade-offs. So I personally, for Bitcoin, I think Bitcoin, the purpose of Bitcoin is digital. To me, it's digital gold. It's not really for like to me, it's not really for average users to use it. So I personally think that 1 megabyte and also 10-minute block time is great for Bitcoin. Like even if they reduce it by, like for example, by half, or increase the block size by twice, I personally don't think it changed much. So to me, like it's never going to be an application chain. So I personally feel like it's pretty good that Bitcoin stay as one megabyte block and stay at 10 minutes block time. And Bitcoin is so unique. Nothing else is, it's the same as Bitcoin. But for blockchain like Alephium, we are so different from Bitcoin in terms of application, in terms of product market fit. We have to focus more on the utility on the application side. So we have to, support smart contracts. We have to support DApps. So for that, user experience is much more important. So we have to balance a bit the design to make the users feel happy and to feel more, more user friendly. So they would like to use us. So we have to make some trade-offs here. So definitely, like short block time is more important. However, like we have like because of it is sharding, so actually the throughput can be higher without heavy optimizations. So you can do a lot of parallelization with this new tech. But of course, it's much more expensive than running Bitcoin for nodes. But it's still much more efficient than, for example, Solana or Ethereum right now because of our algorithm. And also, we did a lot of optimization at the virtual machine level. And our virtual machine so far is much more fast than EVM and also SVM.
I was gonna ask you about this because you mentioned that Ethereum and Solana require more powerful computers to run a full node. What kind of computer is good enough for Alephium? Like, can you actually walk into a computer store and buy a laptop or something and it's just gonna work with the chain, or should you go for industrial grade computers?
So far, it's quite good. You can run it with Raspberry Pi. So right now the main issue is the storage growth is very very fast right now if you compare it with Bitcoin. Every day the storage increases by, I think, by 2 gigabytes on average right now. So it's storage side is growing very fast. CPU wise, it's quite okay right now. So if you have Raspberry Pi with enough storage, it should be pretty sufficient to run the full nodes to validate all of the transactions.
But is the blockchain prunable in the sense that you can only store a small amount of data, or is that not recommended for your sharded setup?
So we, on this part, we are pretty much like Eastman. We can do some pruning, but we cannot really compress it to like 10 blocks, etc. Of course, we can do a bit more further optimizations, but it's not really the priority right now because we have so many, we still have a long, very long to-do list. For pruning, we can, like right now, disk is quite cheap, right? So I personally feel like it's much more, it's probably better that we focus on other issues right now than just to try to prune the full node as much as possible. Because those other features may attract more users to that. And if we try to spend more efforts on pruning the blockchain a bit more, I feel like it's going to delay the kind of the other tasks we are working on right now. So that's kind of the roadmap we have.
I want to get into Taproot, but before that, let me plug a couple of ads. The first one is for Bitcoin.com News, which is actually one of the places where I read about Alephium last year, when I think it was Caspa and Alephium that were the most profitable coins to mine. And this was before you guys got ASICs.
ASICs arrived on the network in April 2024, started with home miners with Gold Shell. Then we had a very busy day in July where Bitmain then announced kind of the more industrial ASICs. And on the same day, just an hour later, then we had also Ice River who announced their ASICs as well. So it's been around a year that the big ASICs are on Alephium and a little bit over a year since from the start.
I think there was a news story at one point about someone who went to a hotel room with a bunch of miners and made like $5,000 or something or more. Anyway, it's a lot of fun when you discover that proof of work still has innovation, and one of my sponsors is Bitcoin.com News, so check them out. Sometimes you're gonna stumble upon something that you're not gonna find on Bitcoin Magazine or other websites. And right now they're orange, which means that they know the difference between Bitcoin Cash and Bitcoin. Because many years ago, many moons ago, Bitcoin.com was the place that was saying, don't buy BTC because BCH is faster. Now, it seems like the market has taught them the difference. And also another sponsor that I want to plug right now is Edge Wallet, which is really cool because you have basically a built-in exchange that you can use without any kind of KYC. If someone, for example, wants to send you some, let's say, Dash, which actually happened to me, someone came up to me in person and said, hey Vlad, do you have a Dash wallet? I set that up in like 10 seconds in Edge Wallet, and then I was able to swap it very fast into BTC without even thinking about what's happening in the background. And that's very cool. It doesn't have KYC and also has a duress mode. So if you're ever asked by someone to unlock your wallet, let's say at an airport, or someone wants to kidnap you because you're in France, you basically type that secondary PIN and it's gonna show a wallet where you either have zero funds if you don't deposit anything, or you can just put like $5 and be like, oh, I only have this. It's pretty cool and it's free to download. So go to edge.app and you're gonna find Edge Wallet for you to download. And now let's talk about Taproot, which seems to be a very interesting choice, right? For smart contracting and scripting. Like of all the Ethereum stuff you could find, you decided to settle with Taproot. And why is that?
So Taproot, I did not really dive too much into it. I know the high-level concepts. I used to dive deep into it, but then I now not really familiar with the details anymore. It's pretty much like a Lightning network. I spend a lot of time on it, understand details, and after one or a few months, I quickly forgot about the underlying details. So Taproot for me is basically an advanced way to spend transaction or spend UTXOs. You can construct a tree of conditions for each UTXO, and then you can have more flexible ways to spend transactions, spend the UTXOs. And with this, you can first have more scalability. You can also have more privacy, as which I have a lot of advantage with that. So like for example, you can also have a more efficient multi-sig with that. So that was my understanding of it.
Okay, so what is it being used for right now in Alephium?
So in Alephium, we don't really have Taproot because we have we use the account model for the DApps stuff. So we can use smart contracts for very advanced stuff like multi-sig. Of course, you can do like something similar to Taproot as well, but you don't really need to have this tree structure. You can actually implement them with smart contracts. So it's a bit like Bitcoin's pay to script hash. You can have scripts, you hash it. So Taproot you can see it as a specific type of script, right? And in our case, because we have our own virtual machine, which is more powerful than the Bitcoin virtual machine. Bitcoin actually has a virtual machine as well, but it's very minimal with very simple instructions, so you can do very limited stuff. But in our case, our virtual machine and the script system is much more advanced. You can do pretty much everything. You can simulate Taproot in our virtual machine, so you can have it if you want to do it. But because we have the support of account model for the states, you don't really need to have those kind of high-key solutions like Bitcoin. So like Taproot is a high solution for Bitcoin specifically. In general, for Ethereum, for Solana, or for Alephium, we don't really need to hack that. We can have native support that as long as you can write the smart contracts. So yeah, so that's in our case is a bit different.
Right. Let me ask you about the mining part, which I think is very interesting because the whole industry, 90% of it right now is proof of stake. For a while, it was sort of a political concern that these projects might get labeled as unregistered securities or something. Now it seems like the political climate is more favorable, so a lot of projects decided to stay or launch in a proof of stake kind of setup. But you guys decided that you want to be proof of work and you want to use the Blake-free algorithm, which, if I'm not mistaken, is not unique to Alephium. And what else? You have a network of miners, and you also mentioned you have 2 ASIC manufacturers. How does this work, and what are the advantages to being proof of work?
I'm not sure if you want to start or you want me to start.
Yeah, I mean, I speak, I think Cheng has already mentioned that the benefit of proof of work, it's also the most robust consensus algorithm today to ensure decentralization, also lightweight node, and many other reasons why proof of work was the right choice for Alephium from the get-go. Alephium started as a GPU mineable coin. So in the beginning, at the start of the network, actually for the first two and a half years, it was mined with GPU. We didn't really had a FPGA period. There was some FPGA, but a lot other network usually will go through like a GPU period, then you have the FPGA era, and for the chain that are ASIC friendly, you eventually end up in the ASIC zone. So for us, it happened a lot faster than what we expected. We were really surprised. I think right now there are 4 manufacturers who offer ASICs, with 3 being the most known. And there's really a range of ASICs from, again, like what they call home miners. So this is ASICs that you could have at home because they will work if you plug them in a normal plug. From a sound and a noise perspective, it is somewhat okay. And then you have the really, I call them industrial ASICs in my head. This is how I categorize them, because they are the one you can't plug at home. You need the industrial kind of electric plug. You also cannot hear yourself if this is turned on. So you need to have like special infrastructure to basically plug them in. So that's a little bit on the history of ASICs and how it's been like for Alephium since the launch. And also, you haven't asked, but a lot of people have a question around why did you choose to be ASIC friendly? Because it's, to some extent, it's a choice. There are some proof of work chain that makes that decide that they don't want to be ASIC friendly. I think there's 2 points, and Cheng, you can add to this, because at the end this was also your choice. But I think it was 2 things. First, you can never really be ASIC proof. You're ASIC resistant, but never proof. So to maintain that ASIC resistance, this is something that is costly, and this is something you have to maintain through times. But more importantly, ASICs remain the fastest way and the best way to increase the hash rate and secure the network. You also have a component of loyalty to some extent, because ASICs are made for a specific algorithm. So you mentioned that we use Blake 3. We are one of the very few chain to use Blake 3. I think there was another one, but they might have changed. I feel like there was a chain called Ironfish that was using Blake 3, but I could be remember it wrong. I feel there was a second chain. I don't know if they still use it today. But in any case, because we were one of the few chain to use Blake 3 and there was no ASIC miner for Blake 3, the manufacturer had to develop a custom miner, custom chip to mine specifically Blake 3, which means that the Alephium ASICs cannot be used to mine anything other than Alephium. And so you have less risk of miner hopping off your chain than, for example, you have with GPU as well.
Yeah, I want to add a bit like why why kind of proof of work is great for Alephium. Like right now, I think like if we see this from user perspective, like they don't really care about if it's run by proof of work or proof of stake, right? For users, they mostly care about the user experience of the DApps. But if we look from some very technical perspective, actually proof of work is very great for us because it's much easier to scale with proof of work. Like our sharding algorithm is much simpler than the one we originally want to do. Is because we use proof of work. We don't need to manage the validators on the blockchain. So you don't need to distribute the validators to different blockchains, right? And this is way more simpler to deal with than for sharding, because proof of work is more stateless. And another thing is performance, because for proof of work you don't need to synchronize all of the validators. So the complexity of the network and the computation is less. You don't need to broadcast all the signatures from the validators to the whole network. And you don't need to aggregate them. And this actually means that the theoretical throughput upper bands or the TPS or latency upper bound could be higher for proof of work blockchains if it's done well. So yeah, so here we don't talk about politics stuff. We don't talk about environmental stuff. If we only see this from a very technical stuff, we can still have some particular specific advantages. And if we push that to the extreme, I believe that proof of blockchain could compete with, or even go beyond the current performance of those very high performing proof of stake blockchains.
Right, but I swear I heard some people from the Ethereum camp a few years ago arguing that you can't do DeFi without proof of stake. That proof of work would be too resource intensive and there would be orphaned blocks and it's harder to reach consensus with fast block times. And yet, what's your block time with Alephium and your proof of work?
So right now we have 8 seconds block time. To reduce further that, you're gonna need to have a new techniques. For example, you can have a layer 2 solutions for that. You have a sequencer solutions for that. You basically use the kind of the proof of work for settlements. And then for the like more short block times, you need other techniques. But I don't think like it's really the main bottleneck for DeFi, because you use proof of work. You definitely can find ways to go for that. I feel like ultimately for proof for DeFi, what you would like to have is short block time. You have high throughputs. You can host a large amount of users. As long as you can do that, then it's okay. So like what I was saying, like you can actually achieve higher throughput with proof of work because of the overhead of the consensus is much lower. But of course, you have the issues. It's a trade-off. You have the issues of higher uncle rates, higher often block rates. You have to deal with that. Have to find ways. But for proof of stake, you also have their own issues, different trade-offs. Like the overhead is higher, the complexity of the consensus is much higher. Like it took Ethereum so many years to, you know, to kind of to have the proof of stake algorithm in production, and still they are not really happy with it. They're still doing a lot of improvements to that, right? So has a different trade-offs.
It's also interesting how the market reacted to Ethereum going proof of stake. It seems like the value of the token has gone down, or at least the perceived value. When they were proof of work, maybe they had a greater network of GPU miners who were interested in transacting. Right now, all of that is gone. Interestingly, it hasn't gone to Ethereum Classic as expected. That chain hasn't really taken off. But yeah, like, do you believe that there's more value in proof of work?
That's a very interesting topic. I personally feel like it does not really, for Ethereum Classic, I don't feel like it will change much, like whether Ethereum goes to proof of stake or Ethereum sticks to proof of work. It does not really change much because they won't be, basically the core team of the Ethereum Foundation won't work with Ethereum Classic. Then there will not be so many developers to focus on that, and then the chain cannot really grow. So in the end, for the chain to strive, you have to have very good community to grow it, right? Usually it's driven by the core foundation in the early days, and if you don't have that, you no matter is proof of work or is proof of stake, like it cannot grow. And then regarding like Ethereum switching from proof of work to proof of stake, it's very hard to really to reason about this. But I personally, I feel like we can speculate on it. To me, it's like the proof of stake definitely have the issue of like rich people get rich. When you are aware of the Ethereum network, you basically do staking, right? And then you just get a lot of high yields every year. You don't really need to work hard. But with proof of work, it's quite different. You have the coin and then you have the inflation. You don't get the passive yields. So it means that I have to invest actively, right, to increase the value of the tokens. So that has kind of the positive sides if you stick with proof of work. And also somehow, I'm not sure if it's coincidence or is related to the consensus algorithm. Somehow the price movement of Ethereum gap after proof of stake did not really go as well as Bitcoin, right? Not sure how much is related, but might be there might be some relations in that.
Right, Alephium is proof of work. Right now you can get one of these ASICs. I'm not sure if it's profitable anymore to mine with your GPU, but at the same time you guys did not have a purely fair launch. You still had some sort of pre-mine. And I want to ask you, why did you have that? Why was it necessary, and what happened to it?
So this actually is, Mo, do you want to answer first, or?
As you wish. I mean, I think, you know, I think fair launch is a broad term, and what people put into fair launch is very different things depending on who you speak to. You know, Alephium when Cheng worked on the project, we needed funds for the initial development of the project. So there was, as part of the growth of the project, with the Genesis block, there were allocations that were minted with for specific purposes. There was an allocation for sale, there was an allocation for the treasury, and there was an allocation for the ecosystem. Those allocations still exist and are being used to fund the development of the project. This is something that really allowed Alephium also to build without the pressure and relying on third-party funding, because this is also very risky. It's like it has happened to other proof-of-work network where they're became at the end more centralized because they were taken over by the third party that were financing it. There was a smaller network where somebody came with a lot of machines, mined pretty much all the chain, and basically said, if you have to run the project like this and we will fund you. And so at the end of the day, they became dependent on third party, and someone in the end took over the network through this. So there's trade-off to both approach. Here it was about how we're not miners, so we don't mine. So for us, it was about having the financial stability to kickstart the project, to build without being subject to third-party influence, because we could remain independent and continue to develop the project. And maybe Cheng, you can give also a little bit more background.
Yeah, I think it depends on the scale of the project. If you just fork Bitcoin code base, you know, change a few things and launch a new blockchain, definitely you can go fair launch. Of course, in this case, there will usually be a lot of insiders who mine the coins in the very early days, and then try to push the project, or try to get it kind of get it into marketing, or go to market, well, like when the mining is kind of stable. But if you build a brand new blockchain from scratch, you know, like us with sharding, we have to build everything from scratch. We have to build a new virtual machine, new programming languages, everything from scratch. It's a totally different story. So in that case, we definitely need more fundings. And also, I don't feel like fair launch is really a big issue, because like the price of our coins was kind of close to the initial pre-sale price for quite a long while, right?
It was for a few months, actually.
Yeah, it was like the price was very, very low. Like, even if for people who like to get the same price as the pre-sale investors, they could get. So I personally don't feel like that was a big thing. And also, like pretty much all of the new project that's big enough, especially nowadays, like the competition is much higher, right? You have to go to market much faster than before. Like, it's not like Bitcoin, you have several years to stay underground, and that's okay. But nowadays, you have to like develop very fast. You have to have a team to push it very hard if you want to get successful or get big. So it's very different now from like than 10 years ago or 8 years ago.
And I also think at the end of the day, it's like everything. There's trade-off to both approach. I think what is really important is about how transparent the team is about the approach that they are taking. It's like this is something that all of the information about Alephium tokenomics always included that part. All of the information was public from the get-go. It's something that some people don't like, but the reason they're able to not like it is because they know about it. And so I think no matter which choice the project make, as long as they are transparent and clear about it, then people can decide what they think it's best for us. But I think they are drawback to each approach. And I think people shouldn't underestimate how disruptive it is for a project to move forward to be dependent on third-party funding. And because at the end of the day, it means that third party will decide what you build, when you build it, and how you build it.
Yeah, on the topic of transparency, I just remembered that like 7 years ago, there was a project called Bitcoin Private, which was a fork of Bitcoin that promised to also offer some privacy features. But there was a hidden 1 million BTCP inflation that was not revealed to early participants, and everyone thought that it had the same economics as Bitcoin, when in fact you had insiders who pre-mined their own tokens and were able to dump on everyone. So you did mention transparency. I guess, are the wallets that were used for the pre-mine public? Like, can everyone see what's happening there?
There was no pre-mine. So with the Genesis block, so it's in the Genesis block. So you had Genesis allocation. So if you go look at the Explorer, you can see the Genesis block. There was no transaction of ALF that did not happen on chain. So everything is on chain. Everyone can see it.
Yeah.
All of the Genesis block and all of the Genesis transaction are there. So all of those initial allocation were distributed with the Genesis block.
And there's also a no pre-mine proof in the code base. So basically, it's like in the code base, the Genesis seed is based on the Bitcoin block hash and the Ethereum block hash. So we can prove that actually we have the latest hashes when we launch the network. So just one day before, like, or a few hours before it. So there's a proof for that. You can prove that we there was no pre-mining. There's just the Genesis allocation, which is very transparent.
Right, let me plug 2 more ads, and then I'm gonna ask you about proof of less work, which I think is the highlight of this interview. It's the reason why I find Alephium super fascinating, and you can present some statistics about how that works. And I gotta tell you about Layer 2 Labs, which can actually integrate Alephium, if I'm not mistaken. They want to build these drive chains, which are two-way pegged sidechains as described by the Blockstream paper from 2014, with some optimizations that were made by Paul Stortz. And he's really not happy with the way Liquid turned out to be, which is just a federation, not a proper sidechain, and wants to build a sidechain for every altcoin that is interesting out there. And right now, if you go to layer2labs.com/download, you can find the software to run the Ethereum drive chain, the Zcash drive chain, a prediction market, and something that's called Bitnames, that's used sort of like Namecoin for registering domains. And what this requires basically in order to come to Bitcoin is a soft fork that's called BIP300. You can also read about that one. And you find all the information about the internal mechanisms of this on the website of layer2labs.com. And I guess they can also implement a sidechain for Alephium if there is demand for that. And the second sponsor I want to plug is Citrea, which recently, I think yesterday, was actually mentioned in a paper by the White House, which is quite impressive. It's a Bitcoin Layer 2 that's coming out this year. It uses the ZK rollup, which is optimistically verified on the Bitcoin blockchain. And what it does is to provide all the best features from Ethereum by leveraging the security of the Bitcoin chain. It's a novel approach to doing Bitcoin L2s. It's different from the federations and the sidechains. It's called a ZK rollup, and I like it. I think it's interesting. You can find more information and run the testnet code at citrea.xyz. That's CITREA.xyz. And keep an eye out because they're gonna launch this year. And now, Mod and Cheng, let's talk about proof of less work. How does this work? Why do you call it proof of less work when it should be a competitive landscape and everyone should try to put as much work as possible to get the highest reward? And yeah, why is it like 80-something% more efficient in terms of energy consumption than Bitcoin?
Do you want me to start, Cheng, and then I can do the high-level version, and then you can add the technical highlights. So the way proof of less work works. Sorry, it's a mouthful. So up until a certain hash rate, Alephium is classic proof of work. So as of right now, the Alephium network is running as classic proof of work. Once we hit a threshold, which is in our case 1 exahash, this is where we start progressively shift part of the cost of mining a new block from external, which is computing power, to internal, so burning coin. So, so it's not, this is not a combination with proof of stake. If you really wanted to describe it as a combination of anything, you could see it as proof of work up until a certain hash rate, and then it's kind of proof of work plus proof of burn. The important part is that the cost of mining a new block continues to increase with the hash rate exactly as it does on proof of work, on classic proof of work. So you don't lower security because the costs remain the same, but you lower the network energy consumption because past a certain point, in that cost is no longer paid exclusively in computing power. It's paid partially in computing power and partially by burning ALF upfront. And again, it's really important. It's not, you are burning the ALF upfront. It's not that you just reduce the mining reward. If that was what you were doing, you would be reducing the security. What is really key here is that upfront, to be able to propose a block and be able to propose a block, in the input, you have to burn ALF. So you'll have the Coinbase transaction, and you'll also have an output of ALF that will be burned. And this is how, and the amount that miners are requested to burn gradually increases with the hash rate up to a point of 87%. And so at very large scale, the network retained the security of classic proof of work, but will consume 87% less energy than if it was on classic proof of work. And 87%, this is the current parameter that is on chain, but this is also something that, if it makes sense, eventually can be adjusted. But it would need a hard fork, of course, for that. Cheng, maybe if you want to dive, I don't know if there's anything you want to add.
I think that's great. Maybe I try to describe in a very intuitive way. For example, right now the Bitcoin spends 2% of the global electricity, right? Maybe close to that. I don't remember exact numbers. So it's around 2% of the global electricity, right? So if let's say that's the proof of work costs less, only 1% of the electricity, I would say Bitcoin is still secure, right? So proof of less work is basically a way to try to reduce that 2% of electricity to 1% for Bitcoin. But we can do a bit more in this case because we have the proof of burning mechanism.
Yeah. And I think, if I'm not mistaken, Cheng, right, this is also part of the design of proof of less work, was inspired by existing research that was done already in the space to optimize proof of work, right?
Yeah, actually, it was inspired by a paper that was posted on Bitcoin mailing list. I read that paper, and I think that it's going to be a great fit for Alephium. And for Bitcoin, it's very hard to change, so I don't see any time that algorithm will be applied for Bitcoin. Yeah, but we think it's great, and we integrate that from day one in the before Genesis.
And I think on the name, it's called proof of less work because at similar hash rates, it does less work than proof of work. I think this is what is the reason behind the name.
Yeah, but at the same time, no matter how much you lower the energy consumption, there's gonna be someone who comes up and says, well, you're boiling the oceans, and these ASICs are gonna end up in a landfill, and you're not environmentally friendly or whatever. So in the case of Bitcoin, I mean, of course, there was the Greenpeace campaign, change the code and whatever, but I think the argument was always, or until recently, it was that at least it enables people to send money around the world with no trusted third party, and it enables financial freedom, and it stops surveillance capitalism. I mean, that was the narrative until a few years ago. Now, once BlackRock bought into the Bitcoin narrative, I think there's less FUD about Bitcoin being the reason why oceans are boiling. But you guys are much smaller, and it's much more difficult to justify the fact that you're using electricity. So someone comes up, let's say some purple-haired journalist comes up to you and says, you're boiling the oceans, you're destroying the planet. What is the value proposition that you're going to put forward to justify the fact that this exists?
I think just to take a step back, I think this has changed drastically. If you look, I should have opened the presentation. Like the perception of mining, especially in the sustainability space, has completely changed. Today, you see mining being praised as one of the most cost-efficient way to finance sustainable transition, because it is literally something that you can plug on and off to support and finance sustainable infrastructure. So I honestly don't think that we would have, when we started Alephium, that was a problematic that we might have had. But this is honestly, I think today the perception has completely changed, and actually mining is being leveraged significantly in the energy and sustainability industries to finance transition to more sustainable practices. And I think at the end of the day, all that stands for Bitcoin, everything uses electricity. And I can give you all of the argument to why actually even Bitcoin doesn't use as much electricity as people think. So I don't even need, I should have opened my stats. I have actually a lot on this. One, again, it doesn't consume as much electricity as we count. I think Bitcoin consumes less energy, and it's significantly less. I want to say half. It's minimum half, but I think the scale was even broader than this, than all of the always-on device in the US. So, you know, all of the electric device that are just in standby mode. In the US alone, they consume more electricity than just Bitcoin. So again, I think the entire narrative around the energy consumption and proof of work has completely changed. And I think, again, there's a reason why there should be a cost to creating money. Like that was the whole point of Bitcoin in the first place, was that money shouldn't be created out of thin air. There should be a cost to do that. And I think that is something that is applicable to Bitcoin. This is also something that is applicable to Alephium. Is like, if you think about a system that is decentralized, that is resistant to censorship, you need, and with the sustainable economical model, you want it to be resilient. And one way to do this is that you cannot just print things out of thin air. Yeah.
I was gonna ask you this because the follow-up for blaming Alephium for using electricity is gonna be like, why do you guys exist? What's the point of this project? What does it produce? What kind of value does it bring into the world? And how is it different from, let's say, Cardano or Ethereum Classic, which is also proof of work? Like, what is the reason that there's another layer 1 into the world? And you mentioned that there should be no cost to creating money. Now let me put on my toxic Bitcoin maximalist hat, and I'm gonna say, well, this isn't really money. It's just a token that you printed out of thin air, that you invented yourself, and then you ask people to consume their hash cycles to mine it.
So, I mean, it depends. I think, one can argue, and this is debatable, whether Cardano smart contract are fully smart contract or advanced scripting. The reality is I think one statement that is fair to say is that Cardano smart contract or development environment is definitely not as user-friendly and cannot be leveraged as extensively as what people are used to on the account model, for example. I think that is, a neutrally somewhat fair assessment. And so Alephium today is one of the very, very few chains that has full smart contract capabilities on proof of work, with the UTXO model, with the security parameter, with the security benefit of the UTXO model. If you look at smart contract platform right now, the vast majority of them are built on proof of stake. And out of the one built on proof of stake, pretty much all of them are built with the account model. And then most of them are using EVM and EVM compatible chain. So they mean they inherit all of the trade-off with the development environment that Cheng and Alephium has built that leverages the UTXO model, but bring the entire flexibility of the smart contract. You actually get the full power of smart contract without the security trade-off that you have in the EVM world or the EVM chain or the account-based chain. It's like, I think everyone that has interacted in the crypto space had the experience of getting their wallet drained, losing their fund to protocol that were attacked with reentrancy. So right now, the solution for smart contracts that are out there are not sufficient because they are not secure. The same exploit happen again and again, almost every day, if not more. And so I think that Alephium is building something truly unique because it is the full power of smart contract with the decentralization and security of the UTXO and proof of work model from Bitcoin. But maybe, Cheng, you have a different way that you envision it.
I think that's a great way to say that basically we solve some problems that exist in the space, and that's why we exist. Otherwise, definitely there's no reason for us to build a new blockchain. So yeah, initially we started with because sharding was not solved, and we solved it. And then we, go DeFi, we see like security issues, performance issues, we solve that. Yeah, and then now we have a very solid foundation. We're going to push for the next phase, push for product market fit.
Now, Maud, you mentioned that Alephium is not EVM compatible, and you presented some pretty good reasons for it to not be. But at the same time, that is sort of the industry standard right now. And you have a lot of smart contracts that were written using or making use of the EVM. And I can argue it's more difficult for developers to come and build on Alephium because they cannot port one-to-one whatever it is that they have been building before. What is the ease of transitioning from Ethereum EVM to Alephium's system?
So I understand your points, and I think the whole point is you wouldn't want them to copy paste what they've done there to Alephium. So there's two aspects. I think first, as a software developer, knowing several language, it's part of the life of a software developer. I've never met a software developers that only knew one language, one framework, and that is it. But more importantly, in practice, what we've seen, because when Cheng and the dev team designed the VM, designed the smart contract language, they built it as developer for developers. So they really looked at all of the pain points that they experienced when they were building on EVM to make an environment that catered to that. So where you don't have a million different ways of doing the same thing, where you have integrated tests into the VM and security check into the VM. And so they really managed to design an environment that is developer friendly and where the developer experience is really good. So what we've seen in practice, I can honestly say that we've never had anyone who tried the tech stack of Alephium as a developer and said, it's too complicated, I don't get it, or something like this. The fact that we're not EVM compatible, it's actually not so much on the developer side that it's complicated. It's a bit complicated because you have the mental barrier of, yeah, okay, it's not EVM, this is something different. But then in practice, every dev that I tried Alephium, whether they were junior, whether they were experienced, whether they came from Solidity, Solana, or any other ecosystem, the feedback has always been overwhelmingly positive, that this is an extremely easy language, easy environment, very intuitive. Where it's a bit more complicated to have made the choice of not being EVM compatible is integration with services. Because like you said, EVM is the norm, and it makes it harder sometimes when you want to offer services because such services will prioritize integrating EVM compatible chain because it's basically copy paste. So this is where it's been honestly more challenging than really on the developer side, meaning that they are chains that are not EVM compatible, that have a pretty complex development environment. And so maybe they have two challenges to face on our side. We've had junior developers who did like an in-person hackathon and had never touched Alephium before, and they could, build something at the end of the day, in like this. I don't know, Cheng, maybe you can tell a little bit more about kind of the thought process as a dev when you design the VM and the smart contract language.
I think EVM is just a first mover advantage. It's not really a norm. If you look at the trading volume right now, Solana trading volume is more than EVM right now, and I believe the market or EVM is going to lose much more in the following years because it's really flawed. It's so insecure. Like you can still see many protocols being hacked every month, and that's a big issue. And I don't see a way that issue is going to be solved. So you have to have new virtual machines, and there are other blockchains that's doing pretty good well, and Alephium virtual machine is one of it. So I personally feel like EVM don't really have a good future. I'm very biased, but I totally believe that, and this trend has already started. If you see the trading volume.
For me, it's really interesting because I see the EVM coming to Bitcoin right now and people trying to port that so that they can bring as many smart contracts on the Bitcoin ecosystem. And you guys are trying to move away from it, but don't you think it's sort of marginalizing you from the rest of the industry?
I personally don't feel so. I feel like, for example, I personally like the new virtual machine blockchains. For example, Solana did a great job, right? I think the activity on Solana is much more than EVM ecosystem. Like really, the cost of building on EVM is much higher. Of course, if you do, if you fork EVM, you deploy the existing DApps. It's probably easy, probably convenient. But if you want to do new innovations, it's much harder. The kind of development cycle is much longer. The cost is much higher. You have to pay a lot to the auditors, and that's all of that slow down the development and innovation, and it's not great for the long term. That's why you can lose the kind of in some of the games in the DApp in the DApp market. And this is just the beginning, in my opinion. And we're going to see more and more grants like EVM is going to lose to the new advanced virtual machines. And it's pretty much like programming languages. We have seen, in the early days, C probably was probably the dominant language, and then we have new languages, like more advanced language, more type-safe languages. And those languages start to get replaced the kind of the old or flawed languages. Of course, C is still used a lot because it's the kind of the low-level stuff. I was just using it as an example. So in my opinion, like definitely EVM is too flawed. If it's just a little bit flawed, probably it's okay, can keep its advantage, its leading position, but it's really just way too flawed. It's going to lose the game in the long term. Maybe we can have another interview in the 5 years and to see if this is become true or not.
Right. So if EVM is C, the programming language, then what is the Alephium approach? Is it Python or Rust, or what would you say?
Yeah, Rust. I would say like a more simpler version of Rust. Rust is great. It's a bit not friendly for newcomers. It's a bit too complex for newcomers to grasp it. But Alephium is as elegant, as safe, and secure as Rust. But we try to make the learning curve as fast as possible.
Ethereum is using a language that's called Solidity for building decentralized applications or contracts. And if I'm not mistaken, it's very similar with JavaScript. And that's also part of the reason why it became popular. What is the programming language that a developer on Alephium must know?
So our language is called Rust. It's kind of we get inspired by Rust, by Scala, and also by Solidity. The Solidity is definitely very easy to learn language, but it's very hard to master. So it's a bit like a JavaScript. JavaScript is so easy to to write bugs. but it's fine for web applications. But for DeFi stuff, is it's another story. If you have one bug, basically your project is going to be totally ruined. So in our case, we kind of like mitigate all of the well-known issues of Solidity, and for Rough, it's quite simple as well as Solidity. So if you want to learn it, you just need to get started with our quick starts documentation. It's like many people say that they can get started to write something with just 1 to 2 days. Yeah, so it's I feel like it's pretty friendly for newcomers.
I want to ask you guys about some of the applications that were built for Alephium and what kind of stuff you find today within the ecosystem, but I have 2 more sponsors to plug before I do that. So there's noonce.com, which is a peer-to-peer marketplace that aims to empower the global south. It's really cool. I think the mission of Ray Youssef, who is the CEO of this project, is very noble. He deals mostly with people from Africa and the Middle East and also Latin America. And basically, if you decide to trade there on the spot market or use their debit card for spending or engage in any way, like even if you have a gift card, you can try to sell it on Noonce, you are empowering the other people buying from the global south to have more liquidity to be able to participate into this global economy. So check it out. It's noones.com. And I think it's a pretty cool exchange. And last but not least, there is SideShift, which is the place where you can swap something that you receive for something that you want. So let's say that someone decides to pay you in stable coins and it's a bull market. It's probably a bad idea to hold on to stable coins. What you can actually do is to tell the person to send their stable coins to the SideShift address, and then you're going to receive BTC or whatever it is that you want into your wallet. The fees are pretty low, the liquidity is good, and for amounts that are small, I don't think there's any registration or KYC that's required. So check out SideShift, it's SIDESHIFT.io. And thanks to all the sponsors for making this happen. And now I gotta ask you guys, first of all, when do you plan to get listed on SideShift? Because I checked, I didn't find you there.
I don't think we've reached out to them yet, but you know what? I'll be just adding that item to my ever-growing to-do list.
Yeah, and you should. Like, it's a good way for people to swap into something else. Like the Trump coin is there. Why shouldn't Alephium be there?
Yeah, I think definitely we can raise the bar a little bit.
They have the dog with the hat. Why would they not have Alephium? Or Obama, Sonic, Harry Potter, Inu 10, or whatever it's called. They have that one too.
One? Did you just make it up, or is that a real one?
No, it's a popular meme coin.
Oh my god.
No, I think it's Sonic, Obama, Harry Potter, Inu 10. And the ticker for that one is Bitcoin.
Oh my god. The space will always surprise me.
I know. So tell me more about the stuff that you can find today on Alephium. Like, what did you guys build and what did other people who came to the chain create for others?
So the only DApp that we built ourselves as of today is the bridge. So we have a bridge to other networks. So we have a bridge to Ethereum. We have a bridge to BSC. That is a fork of Wormhole. So that allowed us to get stablecoin pretty early on into the ecosystem. And that is, as of today, the only DApp that the core team has built. Everything else has been built by third party. And I think, you know, we have pretty much what you would want to see in any good ecosystem: DeFi, DEX, NFT marketplace, prediction market actually are arriving on mainnet. We actually also have tools that help you translate your Solidity code into Ralph code. We have lending over collateralized stablecoin. I think soon someone is going to release Morpho-like lending. So the list can go on. I on purpose don't want to say any names and just stay broad because they are around 70, if not more now, project building on chain. So I just want to make sure that people, that everyone gets the same attention, because there's a lot of things going on. We have a place where people can navigate into the ecosystem. We also have hardware wallet support, custody solution, kind of really honest Oracle as well. There is basically everything that you would want to see in the ecosystem. But we're looking for more RWA project, tokenization project as well, more DEX models, a lot of different things. I think there's a lot of opportunities, especially as a proof of work chain, to leverage DApps to work in synergy with the protocol layer to bring utility, yield, and to the protocol. I don't know, Cheng, if there's anything specific that you want to mention.
Oh, I think that's a great summary.
Sorry.
Okay, so basically you're trying to attract Rust developers to build smart contracts on Alephium?
I think it's not limited. It's any developers that wants to build without having to always worry that they've introduced a critical bug that they didn't see coming, or to have their protocol exploited by one of the many well-known attack vectors they can't protect themselves against. So I don't think we're limiting ourselves. It's any developers who wants to be able to focus on what they're building, on innovating, and really that being at the forefront of their concern, versus how do I protect myself against everything that could go wrong.
I think that every chain needs to have like a killer app, something that sort of distinguishes it from the crowd and makes users flock towards it. I think for Solana it's Pump.fun. Right now for Ethereum, it used to be, ICOs, DeFi, they follow all of these cycles. Right now, I think the killer app for Ethereum is the prediction market, which is Polymarket, which is not even 100% built on Ethereum, but that's another conversation. What is the killer app for Alephium? What do you think is most interesting?
I think time will tell which one will become the killer app. I think we're still early in the ecosystem, and maybe the killer app DApp is yet to come. I think there's many untapped potential, again, with the stateful UTXO model that we have. I think time will tell, but there's many options. I don't know. Also, sorry, Cheng.
Yeah, it's Alephium is a generic platform, so pretty much everything can be built on Alephium. Yeah, but we're gonna need to find the product market fit with different type of apps and to see which one is going to win. Basically, what Mod said.
You had a big hard fork a couple of weeks ago, which was called Danube, and that one brought faster blocks and better scalability and some optimizations. Can you please talk about what that one did? And also, who is this for? Because you must optimize the chain for some type of application or building. And basically, if you mention who this is for, maybe that are gonna listen to this and get inspired to build.
Honestly, it was a pretty big upgrade, and there was a little something for everyone in there. I think you mentioned, so we reduced block time from 16 seconds to 8 seconds. Because Cheng and the dev team did a lot of work in optimization, we could keep block size the same. So we effectively doubled throughput. So you have one of the most performant proof of work chain. I mean, definitely the most performant proof of work chain with smart contracts, but on par with other proof of stake chain. We also, again, there was optimization that was done at the full node level for faster synchronization. I think we divided synchronization time by 3. So it's 3 times faster to synchronize the node. And there's a whole list of things that were introduced in the virtual machine for better development experience for developers. Maybe Cheng, you can touch a little bit on that.
Yeah, so for dev experience, we have a lot of things, but most importantly, I want to highlight the user experience side. We introduced the groupless addresses, and which one basically make the sharded blockchain the same user experience as a single blockchain. So for users, they don't will not feel like it's a sharded blockchain, but it's just a single blockchain as easy to use as other blockchains. And then we also introduce passkey support, which can make the key management much more secure and easier for a lot of people. And yeah, after so many years in crypto, like still mnemonic is one of the big issue, like blocking a lot of people from using it. And passkey is quite key to that. Yeah, DeFi experience is kind of like more technical improvements for developer experience improvements. Yeah, and that's pretty much the three parts of the network upgrades.
There is someone in the chat right now, his name is Krev23, and he keeps asking, can I mine it? Can I mine it? And also, why do you have a block size limit? Sounds like you're going to scale your users and don't want them to mine your chain. If I can't mine it profitably, I really don't care if it exists. It might as well be Visa to me.
You can mine it if you buy a miner.
What's the cost of a miner, and which one is good for home users?
I mean, again, it depends. I think there are some home miners that are, I'm not mining, so I don't know. I think some of the home miners are definitely below 1,000, like a few hundreds. And then the industrial miners that you have, you cannot plug at home, and you will need to either find someone to help you host it or host it yourself if you have the competencies. I feel like there's one that is at around, I don't remember, but between 2,000 and 3,000 for the industrial ASICs. So the home miners are a few hundreds, and then you can get an industrial ASICs for a couple thousand.
Do you recommend any specific build or manufacturer?
I don't have any competences here to recommend. I think honestly, no one in the team is actively mining or has a mining background. So I'm not competent to give recommendation, but we have a dedicated mining chat where miners would be, I think, more than happy to give you a recommendation on the best setup for your context.
Okay, you want to keep it diplomatic, I understand. You don't want to pick between the companies that are building them, but I think Bitmain was the first one to come up with an ASIC, but I think that one is also industrial, so maybe it's not what people want from home. The question that I have for you right now, which does not come from Krev, is it still profitable to use GPUs?
No.
So you shouldn't even bother. If you have a rack of GPUs, you shouldn't use them.
Not at all.
If your electricity is free, and you really have a lot of GPU, why not? But otherwise, probably not.
Yeah, kind of like Bitcoin as well. Mining Bitcoin with GPU.
There's also someone in the chat who says that Alephium's hash rate had grown to 42,000% from January 1st to 2025's all-time high, and Alephium used to be the #1 profitable coin most of 2023 on GPUs.
That is the growth of the hash rate since we had the ASICs. This is correct. So that part is for sure correct. The rest I don't remember, but I will let miners that mine in 2023 confirm. But the first part is correct. The hash rate, I think, before the ASICs, we were at a few terahash, and now we are at around 20 to 25 petahash with a peak at 57 petahash of hash rate at the all-time high. So it's grown pretty fast.
I have to ask you, was the chain ever NiceHashable, which means you can rent the GPUs to basically obtain a majority of the hash rate?
Yes, it is, but the market is not big. The last time I checked it, so probably there was not so many miners they put hash rates on the market. I'm not sure. I'm not very familiar with NiceHash, but it's integrated.
Yeah, I think it was used a lot when we were GPU mined. I think since we're ASICs, it's probably not as much used. But when we were GPU mined, I mean, and we still are on NiceHash and available there. Just there was a lot more usage when we were GPU mined.
Also have to ask you guys, because there's questions in the chat about the price. Why did you go from like $2 to like 29 cents right now? What is it that happened? Did the users drop out, or was there anything significant?
As a general rule, we don't talk about price. Like this is something we don't, whether the price goes up or the price goes down, we don't comment. Like partially is legal reason, because as a project, for the same reason that we don't comment on price. I think part of the price action follows market trend, but then any other comment on it is pure speculation, because nobody can really ever know.
Okay, but I can argue that your chain is just as interesting as Solana, but at the same time, it doesn't have the market price or the users of Solana. And I want to ask you, why is that?
Part of it, I mean, again, here it's pure, it's speculation because it's difficult to know. I think part of it is marketing budget. I think that one is partially fair if you are asking specifically about Solana. I think overall budget makes a big difference on the attention that you can grasp in this industry and that you can retain. Same goes for kickstarting an ecosystem. The more money you have to fund and kickstart the ecosystem, the longer you can do it, the more DApps you can support, even if maybe you don't have users to support it in the beginning. I think in this case, one of the components probably is funding, but again, it's part of it is again pure speculation. So I don't know, Cheng, if you have thought on this.
I think it's a mix of many factors. Definitely, funding is one of it. Another thing is we kind of actually we have so many innovations, so it took much longer to build. Like we compared to many blockchains, we have sharding. Like sharding is not really something done by that many projects. We built a new virtual machine. And a new programming language. So if you see Solana, the virtual machine is built on top of another virtual machine, and they use Rust as the language. We try to make the virtual machine more secure and also language more friendly. So it took a bit longer. So it took longer time to build the foundation, and also we are definitely less known compared to others. Did not have kind of a like big budget for marketing. We did not try to raise big or sell a lot. So yeah, a lot of issues, like a lot of factors like that. Yeah, but right now, I think the foundation is very ready. We are going to go for the focus more on the growth side, the product market fit side. Hopefully, since it's going to be very different in 1 year or 2 years.
Yeah, honestly, I don't think you need much of a marketing budget. You just need to get on more podcasts. Look at Charles Hoskinson. He's the master of that. He just does YouTube videos and talks about stuff, and people buy into his token. And is his product superior in any way? I don't think so.
But I can tell you his budget is superior. It's like you really chose the example of a chain that has massive budget, though. It's like,
Yeah, maybe because they pay people to shield the token, which, once again, I'm speculating. I don't know if it's true. I said maybe. Don't sue me. But my point is that you should be on more podcasts. Like, I'm happy I got you guys because I've learned a lot. And I do want to ask you if there's anything that you think Bitcoin can learn from Alephium to provide some optimizations, work better, even for its limited purpose of being a store of value.
I have one that is not technical. I think I have one, which is maybe one thing that for me, I always admire in the approach that Cheng and the dev took was to always try and be future proof. So to some extent, leave room for evolution when it makes sense. So that if one day you want, you can easily. And this is maybe not so much for Bitcoin, but maybe one example is maybe Ethereum, who did want to change, but that change was very, very painful and very long and is still ongoing. And so at least for me, one thing that I admire from the approach that the developer take is the fact that they know that what they don't know, and they try to build things in a way that can evolve if it needs to in the future. And so I like that about Alephium. Please don't kill me for having said that.
So from my perspective, I'm quite familiar with Bitcoin code base. So one thing I really think the Bitcoin devs should do is try to make things much more simpler. Like there are a lot of hacks in the code base. A lot of designs are very hacky designs. Like it's very hard to grasp and to contribute. So that's also that's not really great to create a dev community for Bitcoin. Even though like Bitcoin has a lot of devs, but a lot of them are really very hackers. They build hack solutions into the code base, and in the end, it makes the code base very complex to manage. And that's what's not that's great. And in Alephium, we try to keep everything very consistent, make design as simple as possible, make the dev tools as dev friendly as possible, so it's very easy to build on top of it. But with Bitcoin, like building on top of it is very, very hard, to be honest. So that's something I hope that Bitcoin can change at some points. And the last thing I hope Bitcoin change is to move to probably a tail emission model at some point.
Oh, interesting. You're not a fan of the 21 million coin meme or cult or whatever.
Yeah, as long as it works, I'm fine with this, but I don't think it's going to work in the long term. So I believe they have to make a change at some point. So, and for that, I believe that a tail emission model is a good one. But we'll see. Maybe they can come up with something more smart, and then we can adopt. Right now, we are following the tail emission model.
When I had Vitalik on the show, he acknowledged, in a way, that Ethereum is sort of the most successful and most liquid, not layer 2, but sidechain to Bitcoin right now. Because there's 100,000 BTC that's locked into WBTC, which is not in the best setup. There are no proper trustless bridges or whatever. It's custodied by BitGo and it's issued as a token on the Ethereum blockchain. But still, that's orders of magnitude higher than Lightning and Liquid and everything else combined. And I was going to ask you, can Alephium be used to tokenize Bitcoin? And what are the advantages to that?
Yeah, I actually personally look into the Bitcoin bridge with quite some time. And it's very, very hard because Bitcoin don't really have this smart contract capability. So from my perspective and given what had happened in the space, like people have tried to build decentralized bridge for between Bitcoin and the Ethereum, and didn't really get great success. So I personally feel like tokenized Bitcoin, probably the programmatic approach is still either by a multi-sig bridge or more like the BitGo approach. That's like the users they would like to use. So if Alephium is gonna go that approach, definitely. If Alephium is going to focus on the Bitcoin bridge, definitely we have basically those two options. And right now we have the RAD BTC from Ethereum, from Ethereum with the bridge. And if we tokenize Bitcoin Alephium, the benefit, I think the first benefit is we are based on UTXO model, so like Bitcoin, very similar to Bitcoin. So the whole tokenized Bitcoin or wrapped Bitcoin on Alephium could be more like censorship resistance, like Bitcoin network right now. So overall is like you can get Bitcoiners is going to be happier because it's more like Bitcoin, but at the same time you can use Bitcoin to get all of the DeFi utility.
But how is that different from using Ethereum? You mentioned the UTXO, but are there any other benefits or some sort of killer app to get people to do this?
Yeah, so with UTXO, like all of the coins in your own wallet, right? It's not in a smart contract. That actually has some implications that you own your coin, and with the Cosmos, with the smart contract is like owned by smart contracts. If there's a bugs in the smart contract, there might be a risk. Of course, for very simple smart contracts, you don't have such risks, but that still could be a good argument in general, right? And it's very much more like the Bitcoin approach for like Bitcoiners. If for average users, I don't think they really care much about that. They don't really care about its proof of work or proof of stake. So from that side, probably there won't be too much difference. But for Bitcoiners, like hardcore ones, especially like you guys, definitely UTXO model is a more favorable model.
Because token are first class citizen. This is what, so if when a token is in your wallet, it's actually yours and it's not, it doesn't exist. And it exists in your wallet as an asset. Tokens are first class citizen on Alephium, whereas, for example, on Ethereum, they are not. They exist through the smart contract. So if the smart contract that issued your token has a problem, this can impact your ownership of that token even in your private wallet. Whereas with token being UTXO based on Alephium, you have true ownership of your assets. And then, of course, all of the security aspect that we discussed, no reentrancy, no unlimited approval, attack vector, and again, proof of work.
Okay. It still doesn't compel me, like it doesn't really want me to move my BTC to Alephium to transact. But I gotta think about it. Are there any privacy benefits or advantages on Alephium? Can you do ZK rollups and ZK stuff? Or is anyone working on that?
So right now, that's not on the roadmap because the throughput of the blockchain is very high. We are sharded blockchain, so we don't really need layer 2 or ZK rollups right now. But we're probably going to experiment some of the text to reduce the block time further to make people feel more compelling to use it, basically, as you say, that's to attract more users, more use cases, more applications. Yeah, for privacy, there was no protocol on it, but theoretically you can build either mistnet or Tunnel Cache, like the pool-based privacy stuff.
Is it possible to port something like Tornado Cache directly to Alephium, or does it require some sort of modifications?
I didn't do it, but I look at it at kind of the big picture. I feel like it's pretty much doable. It's not gonna be that hard, and also for mixed nets, is probably pretty doable as well. So yeah, I think many issues right now we are still in the very early stage. We still need to grow and attract more developers to build on top of it. That was kind of the main challenge right now.
You wanted to say something, Maud, and I cut you off.
I was like, what did I want to say? I wanted to talk because you mentioned also killer DApp and things like this. I think, again, we're still quite early into the ecosystem. We've got kind of, like I said, the foundation, kind of everything you want to see in the ecosystem, and we're slowly starting to see people building things that are unique to Alephium. And I think one angle that eventually can be interesting is, again, the linking kind of the mining side of things with the DeFi side of things and doing so natively into a single network that is also proof of work. I think there's a lot of use cases that haven't been explored yet and that I really hope will be soon. And I think one of them is again, by bridging those two ecosystems together into a single network.
I mean, that does sound promising, and honestly, it's the most bullish idea about Alephium that you presented throughout this interview. I hope people have listened to it. It's been almost 2 hours, and if you are still here after 2 hours, maybe you should write a special word in the comments just to prove that you've been here. Like, what should the word be?
Maybe it should be Danube. Like, it should be Danube.
Danube.
Probably. Yes. Which I don't even know if it's the right way to pronounce it in English, but in French, this is how you say it.
No, it's Danube.
I think the name was kind of proposed by Vlad, right?
I don't think so. I think I was... Oh, yeah, because you had another one, Volga or something?
Yeah. And you replied Danube, and then we discussed about it, and we think it was a great idea, so we chose it.
Really? Last year, I think, or 2 years ago? I remember seeing something
1 year ago, yeah, last year. Yeah.
Oh, really? So I was that influential on your project? I had no idea.
I didn't know it was you, actually, but now that you remind me, Cheng, I remember we had a poll, and and it's true on Twitter.
Very few people knows it.
So see, it has to be Danube, because it is thanks to you. You actually named our latest upgrade. Who knew?
Well, that's so cool. Now. But what's cool about it, of course, I'm biased because I'm from this part of the world, but it goes from Germany, and it goes through a lot of European capitals. It goes to Bratislava, it goes through also Budapest, and it goes into Romanian. What's the verb for it? It spills into the Black Sea. So it goes a long way. It goes basically half of Europe. It's also backed by waltz by Johann Strauss, which is called Blue Danube. It's very famous. If you don't know that one, you shouldn't be listening to this podcast. I'm sorry.
It's a good continuation of our previous upgrades. We started with Lemon Lake. It's the lake around Switzerland. And then the second upgrade name is Horn upgrade. It's a river that's connected to the Lemon Lake, I think. Yeah.
I was gonna say it goes all the way to the Mediterranean Sea. We hesitated to call this upgrade the Mediterranean upgrade, but for obvious reason that it's really hard to pronounce. That's not what we went with, but we like body of water as name for upgrade. And Danube was our greatest upgrade to date. So
until the next one, of course. But I've been meaning to ask you this also. What does Alephium mean? It sounds like Ethereum, but mixed with Aleph. What's Aleph?
So Aleph is the unit for infinite. So because we are building a very scalable blockchain, so we want to tell the message that Alephium has infinite potential. So we use the units of infinite is Alph. And then we took some inspiration from from Eastman, right? So we coined this new word, Alephium, and yeah, that's the name.
When I was doing research for this interview, I stumbled upon something that's called Aleph0, and I was wondering if there's anything that you guys have in common.
It was a coincidence. Actually, one of the core devs of the projects, we used to study in the same school. Not study like doing PhD research. So I know one of the guy there. It was like totally coincident they choose Alpha as well. Even though I don't know why they choose that, but yeah, probably because mathematics people love this.
What is a good way to start with Alephium after listening to this interview? Like a wallet that people can download, some softwares, anything. Do you have any faucet for claiming coins or tokens, or do you do any community giveaways, or what is a place where they can buy some tokens?
So the place where you have the answer to all of those questions would be the website. We recently updated it, and we have a page that literally has the answer to all of your questions one by one. If you want to try a wallet, we have everything you want. We have desktop, extension, mobile wallet. I personally, my favorite is the desktop wallet, but it's definitely not for everyday user. But if I have to recommend one, I'd say the desktop wallet is my favorite. You can buy, actually now you can buy Alph directly in the wallet, because we've done a lot of work to integrate many on-ramps, but we're also on several exchange, decentralized exchange, as well. So do check out the native DEX of the Alephium ecosystem as well. There is probably the website as the answer to most of your questions, but and if you're more technical, docs.alephium.org is the place where you would want to start, either if you want to run a node or if you want to start building. And I know that with your audience, we don't need to, and it's refreshing that we don't need to remind people why it's important to run a node, because nodes are the network. And so if you want to run an Alephium node, please do. You can do so on a Raspberry Pi.
Okay, I see that a lot of people in the comments started. Actually, this is the chat. After I publish this, it's gonna be the comments, but they started posting Danube. And there's also someone who mentioned that the names of previous upgrades were Lemon, Rhone, and now it's Danube. And someone also mentioned that the naming was originally going to be Blockflow.
That was the name of the algorithm, the sharding algorithm, Blockflow.
Okay, so we established how Alephium works. I did try to present every piece of criticism that I possibly could, so people don't listen to this and be like, oh, this is paid marketing, whatever. And also, I told people how to get started with Alephium. So is there anything that I forgot and you really wanted to mention in this interview?
If you want to dive into a new blockchain and want to have some fun, Alephium is definitely the place for you. You will not be disappointed. So just Alephium.
Maud, do you have anything to add?
No, I think honestly, anyone that has taken the time to dive into Alephium usually came back. I've never had anyone looked into Alephium and not like what they saw. There's really something for everyone. Really, it's a lot of innovation in different aspects. So whether you're proof of work maxi or a builder who likes to innovate, someone who is passionate about security and software security, there's really something for everyone in Alephium. Also as a user, if you want a secure, fast environment. So I think, doesn't cost much to look, and I think you'll like what you see. Thank you so much for giving us the opportunity to present Alephium to your audience. Thank you also for asking all the questions that you wanted to ask and all the criticism, because this is the only way I think people can truly understand a project. So really appreciate that. Thank you.
Also, where can people follow you personally and the project?
We're most active on Twitter. I would recommend you follow Alephium and Cheng. Me, I'm basically a retweet bot, my account. So my account is not super interesting, but Cheng does do from time to time in between coding some technical take or feedback or technical deep dive. I think this is someone that you should definitely follow. And then the main account. Me, I'm just a copycat. I just quote tweet everything Alephium does.
Beautiful.
I have zero personality on Twitter. There's no need.
Okay. Thank you very much, Maud and Cheng. And I wish you all the best with Alephium.
Thank you. Thank you.
Thank you so much for having us.
And once again, thanks to the sponsors, Layer 2 Labs, Edge Wallet, Bitcoin.com News, Nuance.com, Sideshift.ai, and Citrea.xyz. I'll see you in the next one. I think the next guest is going to be Andrew Polstra from Blockstream. He's going to talk about some new stuff, maybe related to the scripting language that they have been building. And then there's also going to be Sergey and Matt from Bitrefill, and they're going to talk about their stats. And then last but not least, I think it's going to be later in August, we're going to have the creator of Kaspa. And apparently that one's going to get a lot of listeners. So stay tuned, and thank you for